Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, the market started off up today after Dell had good earnings, a number of blue chips reporting solid results, but it's turned over and moved into the red after the consumer confidence number came out just after the open today. We were up in the S&P as many as 9. We've dropped down to as many as down 8. Right now we're down about 5 in the S&P 500. VIX futures are up moderately. VIX cash not so much because of the coming weekend. It's interesting in the VIX, we talked about how people have been very bid for upside, and not just little upside, a little bit upside like the 35s and the 40s, but in September crash-like levels, people wanting to insure themselves cheaply against a monumental crash. So there have been a lot of strategies where people will sell a mid upside call like the 45s to buy multiple 55s and 60s. The result of that is all of that upside has really been bid. We're seeing that reverse a little bit now as people are starting to take a crash off the table for September. One order that typifies this is the September 27.5 30 1x3 call spread. The customer in this case bought 127.5 and sold 3 September 30 calls. Now to do that they collected $1.45 to them. So anywhere below 27.5 they collect that $1.45. At up around 30 they make just under $4, but they start losing money rapidly on the upside. By 32 it's break even, by 34 they're down $4. So it's an extremely short strategy for the extreme upside, but anything below 32 it makes money on. So when you see a customer come in and do 3,000 by 9,000 of this, it shows that there's less concern about that 35, that 40, those crash levels in September. So we're starting to see that come in, starting to see less people concerned about that upside, especially in September as we approach expiration. That's what we have going on here. Check back for more after the weekend. Jamie Tyrrell, Group 1 with Option Monster.